All right, we're still continuing with the adjusted trial balance and creating financial statements now that we know about adjusting entries in the adjusted trial balance. So in the prior video, we did the adjusting journal entries and we had posted them by hand. Really, and what I want to do is I put this in Excel because there's a lot that can happen here. So just to show this to you in a reasonable amount of time. And on a just to give you a heads up, also on a test setting, I would have a lot of the information filled out. So like right here, I'll put the sum of all these debits and the sum of all these credits over here. Oh, that's not good. See, we already have an error. So 3,000 in unearned service revenue has not been set over here. There we go. Now debits equal credit. So debits always have to equal credit. So now we do the adjusted trial balance. And all we did was our journal entries are posted in the center two columns right here. So these two columns are represent the ledger posting of the adjusting journal entries. But adjusting journal entries, as every other journal entry, would get posted to the ledger. This tool we're using here is just kind of a shorthand way of getting there. So this ending balance of cash is going to be for every ending debit balance. You start with its beginning debit balance, add any debit adjustments, and subtract any credits. So that's 15,000, and I'm going to go copy this formula. And still holding, okay. Now here is a accumulated depreciation as a normal credit balance. So I have to add its beginning balance plus any credit changes minus any debit changes. And so its ending balance is 5,000. Accounts payable also has ending credit balance. Unearned service revenue, ending credit balance. Interest payable, ending credit balance. Long-term note payable. Common stock, retained earnings. Dividends is a debit balance, so I use the other formula. Service revenue is a credit balance, and then so just what am I doing here? Let's see if I can get a pen. So if this, let me go to one of the adjustments. Prepaid insurance beginning is 4,000. Reduce it by a credit of 1,000, you end up with 3,000. If there had been a debit, I would have added it. So anything with a debit balance, you start with the beginning debit, 15,000, add any debits in the adjustment column, subtract any credit in the adjustment column. So let's look at a credit one. Unearned service revenue. We start with the credit balance, add any other credits or earn any in the adjustment column, subtract any debits in the adjustment column. There's a $3,000 one. You end up with a $9,000 balance. Okay, so it's as if you had a T account for unearned service revenue, started at 12,000, reduced it by 3, you end with 9, but we're just doing it all in one row. Okay. Boy, don't let me pick that eraser, so bear with me here. Oh, stop working. No. And of course, it's restarting on me. All right. Okay, I'm back. I recovered. And what do we have to add? Let me see. We want to put these sum formulas here. Okay, so something has grown around here because our balance isn't balancing 98 and 100,000. So what probably has happened is I've missed, since we know our debits and credits equal to adjustments, I have missed adding in, this is $2,000 lower. That's right. That's right. That's right. So, okay. Oh, so right here, I just forgot it wasn't adjusted. It was, but it was in there. It was unadjusted. We've paid all our salary expense, so there it is, 2,000 salary expense. And now you have debits equal credits in the trial balance, in the adjustments, and in the adjusted trial balance. Now, everything here is ready for the balance sheet except retained earnings. Retained earnings hasn't been adjusted for net income and dividends. So what you have to do with the adjusted trial balance is the same thing you did with the trial balance. Remember that it is, let's see, we go These are assets, including this credit one. This is a contra asset. Accumulated depreciation be classified with the assets. Then you have, so that's a weird one, liabilities and stockholders' equity. I'll just call it SE. Dividend, revenue, and then expenses. So just as with the regular trial balance, the adjusted trial balance is ready for you to create the financial statements.